He turned 10K to $2 million. The Darvas Box strategy.
What?
Unbelievable. Let's unravel the secret of turning a few bucks into millions, all thanks to the Darvas Box strategy. First off, who was this genius investor? Nicolas Darvas was a professional dancer. He was not a stockbroker who danced his way into the financial world. With no formal financial education, Darvas developed a groundbreaking strategy, leading him to amass a fortune in the stock market. Presenting the star of the show, the Darvas Box. Imagine stocks moving in a pattern, like a dance, within a box on the chart. These boxes are formed by identifying the highs and lows of a stock's movement over a period of time. The top and bottom of the box signify the stock's resistance and support levels. When a stock price breaks through the top, it's like an escape to a higher level, a call to action, a buy signal. And if it dips below the bottom, it's an alert to sell. Darvas looked for stocks in a consistent upward trend, ones that kept forming new boxes above the old ones, like a staircase to success. But wait, there's more. Volume is the secret ingredient in this strategy. Darvas sought stocks with increasing volume on the breakout. It's like the crowd cheering louder as the dancer leaps higher. This spike in volume indicates strong interest and confirms the breakout's validity. Think of it as the market giving a thumbs up to your move. It is like everyone wants more of the same great show, which makes the tickets more precious. So, the golden rule, a breakout with high volume is your green light. Without it, proceed with caution. But as with any good show, there is a twist in our dance. Darvas practically ignored the market news.
Really?
Why? He believed stock prices and volumes told the whole story. Turning off the outside noise helped him focus on the price action, not getting swayed by emotional reactions to news events. Today's lesson: don't let the headlines dictate your dance. Stick to the strategy, watch the boxes and volume. So, how do you put this into action? 1. Start by identifying high-potential stocks in a strong uptrend, preferably in high-growth industries. 2. Monitor their price movements. Draw your boxes. Wait for that breakout with increased volume, then make your move. And 3. Remember, discipline is key. Set your buy and sell points based on the box tops and bottoms, and stick to them. Is the Darvas Box foolproof? No strategy is. It's brilliant for trending markets, but can stumble during high volatility or sideways movements. Plus, in today's fast-paced, algorithm-driven market, the simplicity of Darvas's strategy might need a tech-savvy twist. Yet the core principles, disciplined trading, focus on volume, and filtering out noise, remain timeless. So, we might also share some of our finds here and there. There you have it, the Darvas Box strategy. A magician's dance of numbers, volumes, and disciplined moves. Whether you're a beginner or a seasoned investor, these steps could lead you to your financial stage. Were you making a New Year's resolution to be ahead of the crowd? Then, what are you waiting for? Dance your way to success. Hit subscribe, like, and share, with others to join us for more financial strategies that rock.